Hello and welcome to Traders. Here's the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is the 17th of January and we started from the USD CAD pair. Loonie has important test as Canada will release its inflationary data today. Irina Monzenko reports. The fact is that Canada will release its inflation report today. In light of recent events, this may provoke price turbulence, but we don't know whether it would be in favor of bulls or bears. According to a number of experts, the Canadian Central Bank will leave interest rates unchanged at the first meeting in 2023. Thus announcing a pause in the process of tightening monetary policy. The Bank of Canada made it clear that it will further assess the need to further increase the key rate to restore and maintain price stability and return inflation to the 2% target. Assessing the dynamics of the consumer price index across 2022, a downtrend is forming after peaking 8.1% in June. However, during the last 4 months, the rate of deceleration of inflation has decreased significantly and actually came to zero. So the index was at 7% year-on-year in August, 6.9% in September and October, and finally 6.8% in November. In other words, overall inflation has stopped slowing since late summer, remaining at unacceptably high levels for the Bank of Canada. According to preliminary forecast, Canadian inflation will show a more significant slowdown in December. For example, the overall consumer price index in monthly terms should decline into the negative area, reaching minus 0.1%. On a yearly basis, the CPI should reach 6.3%. This is the weakest growth rate since February 2022. If the inflation report comes out at least at the forecast level, not to mention the red zone, the Canadian dollar may be under pressure. In this case, it will be possible to talk about a steady slowdown in inflation amid a fairly strong labor market. The inflation report will largely determine the mood of the Canadian Central Bank in the context of the first meeting in 2023. If inflation indicators come out in the red zone, the market will talk about a possible pause in the rate hike. If the report surprises investors with a green color, the loonie will receive support, especially amid a weakening greenback, and will be able to return to the support level of 1.3330. From a technical point of view, on the daily chart, the loonie is located between the middle and lower lines of the Bollinger Bands indicator, as well as under all the lines of the Ichimoku indicator, indicating bearish sentiment. The nearest target of the bearish movement is the 1.3330, which corresponds to the lower line of the Bollinger Bands on the D1 chart, with the prospect of further decline to the base of the 30-second figure. But you should only make a decision once the inflation report has been released. This report can significantly redraw the fundamental picture of USD CAD. And we continue with euro-dollar pair, pivot levels by Evangelos Paulakis. Euro-dollar pair was trading sideways yesterday with no clear direction within the day. The key upward target for bulls is the area of 1.0931 and 1.0943. Upper target of the weekly Ichimoku cloud plus monthly medium-term trend. In case bears are active, their targets will be found at the support area of the daily Ichimoku cross. 1.0725, 1.0679, and 1.0633, and their accumulation of monthly and weekly levels of 1.0611 and 1.0546, located slightly lower. On lower time frames, the situation is uncertain. The pair is hovering near the resistance area formed by the central pivot level of 1.0832. Trading above the weekly long-term trend of 1.0794 will maintain the bullish trend. Intraday upward targets are found at the standard pivot levels of 1.0863, 1.0905, and 1.0936. Consolidation below the weekly long-term trend of 1.0794 will change the market balance on lower time frames. In this case, bears will head for the area of 1.0759 and 1.0717. Trading from resistance and support levels. Jakub Nowak with the GBP USD. UK is releasing important reports today that could determine the direction of the market in the short term. Of particular importance is the data on the labor market, as households in the region continue to experience a cost of living crisis. A drop in average earnings along with high inflation could weaken demand for pound. Meanwhile, there are no important reports that could seriously affect the market in the afternoon. The Empire Manufacturing Index is likely to be ignored, but a speech from FOMC member John Williams could lead to a spike in volatility and a possible fall in GBP USD. For long positions, you can buy pound when the quote reached 1.2206 and take profit at the price of 1.2266. Growth could occur if upcoming UK data exceeds expectations. However, make sure that when buying the MACD line is above zero or is starting to rise from it. Pound can also be bought at 1.2153. But the MACD line should be in the oversold area, as only by that will the market reverse to 1.2206 and 1.2266. For short positions, sell pound when the quote reaches 1.2153 and take profit at the price of 1.2086. Pressure will increase if upcoming UK reports are weaker than expected. But make sure that when selling, the MACD line is below zero or is starting to move down from it. Pound can also be sold at 1.2206. However, the MACD line should be in the overbought area, as only by that will the market reverse to 1.2153 and 1.2086. Gold Sweet Gold Trading Idea presented by Petar Yakimowicz. Gold has been trading downside, but Petar sees the gold is in an oversold condition, which can be a good sign for further rally. Due to the intraday oversold condition and strong upside trend in the background, Petar sees potential for the further upside movement. In case of a breakout of 1912, watch for buying opportunities with the upside objective at 1928.24. Stochastic is showing oversold condition and potential for the upside movement. Key support is set at the price of 19.00. That's all for today. See you next time. Good luck.